You are wrong all the time. I am wrong all the time. However, we don't often think that we're wrong. And if we have an inclination that potentially we are wrong, we don't like to admit it. Now, this tends to be worse for guys. We shit truths and rainbows, right? And that is why you very often see two people having a debate, which more accurately could be called an argument. Now, person one thinks they are correct, and they think person two is an idiot who can't accept the truth. However, if we were able to flip the tables, person two also thinks they are correct. And person two thinks person one is an idiot who can't accept the truth. This is human nature. It's very, very normal. We take all of our life experiences, all of the things that we have learned, and we throw in a little bit of confirmation bias, and we use all of that together to come up with what is right and what is wrong, what is correct and what is incorrect. Now, you could have person one and person two having this argument all day or all week, and it's very unlikely that either one of them would be willing to admit that they're wrong, because within their own mind, they are correct, and the other person is incorrect. Now, for most people, they can go through their entire life like this. Most people do. You see it all the time. And it doesn't tend to have too much of a negative impact. However, if you bring that into the financial markets, it will wipe you out. It will clear out your trading account very, very quickly. Because when you come to the financial markets, there's still that tendency to think you are correct. So have you ever done something like this? And I can assure you, when I was learning, this is exactly what I used to do. The market comes into a resistance area. You've been thinking to yourself, this is a great area for the market to reverse. You take a sell position. The market moves up and stops you out. A little bit frustrated, but maybe I got in a little bit early. You get into another position. It moves up and stops you out. Okay, again, maybe a little bit silly, but this is definitely going to reverse here. I know it. You up your risk massively to make back those losses. And you get into another position and it moves up again and stops you out. Or you get into that first position, and as the market moves up, you move your stop. And it moves up again and you move your stop again. Moves up again and you move your stop again. You are person one who thinks they are correct, and you think person two is an idiot. But the problem is person two is the market, and the market is actually always correct, and it will take all of your money off you very, very quickly if you allow it to. So what do you do? How do you stop this? How do you combat your natural tendency to think that you are always right? Well, the first thing is simply becoming aware of it. Most people who come to trading aren't aware of it. I wasn't aware of it when I first started trading. And that's why people think things like, maybe you're thinking this watching this video. Yeah, lots of people make mistakes trading, but it's not going to be me. I know what I'm doing. And you approach the financial markets as if the financial markets owes you something, because you are always correct, you are different, you are special. That is what everybody thinks when they come to trading, apart from a very small group of people over here who are consistently profitable. The consistently profitable people understand that they have massive weaknesses. By becoming more aware of it, they can start to combat it. Now, the first thing you do is you accept that you are going to be wrong all the time. And then you understand that it doesn't matter. The only thing that matters is that you don't allow the mistakes to balloon into something bigger. You don't allow the mistakes to bleed over into the next trades that you take. Now, by being aware of the fact that you always think you're right, it also helps you to become more disciplined when you are trading. Because one of the things I'm always doing is double checking my analysis. And I do it in a specific way. I'm looking at whatever position, my sell position, coming into the markets in the morning, and I'm thinking, okay, this area looks great for sell position. Market comes up to that sell position. I'm in position 1. This is fantastic for sells. The market's definitely going to reverse. But then I think to myself, but you're quite often wrong. Your girlfriend tells you enough. And then I put myself into position 2. Okay, so I'm looking to sell here, but what if I was a buyer? What is the buyer seeing? What benefits does the buyer have? Is it pulling back into a perfect area of potential support to continue a bullish movement? Has it been in an enormous bullish trend intraday and I'm trying to buy into it without a lot of confluences? By doing this, I can become more aware of what is going on in the market, because as traders, we can get tunnel vision. Tunnel vision means that you are watching the markets all day, you're bored out of your mind, you're frustrated, you just want to take your trade, it gets to your resistance level or your support level, and all you're thinking in your head is, it's time to take my trade. You've already decided it's a good area, you've already decided that you're correct, and so you brush everything else to the side and you just take the position as soon as it arrives. By breaking out of that, by becoming more aware of what is actually going on, by forcing yourself to reconsider, it can help you pause and it can help you reassess what it is that you're looking at from position 2. So simply being aware of what is going on is going to massively help you. Understanding that you are wrong all the time and that is okay is also going to help. Assessing what someone in position 2 would be thinking is also going to break the tunnel vision. It's going to allow you to assess the market in a different way, and it's really going to help just make you pause before taking the position. Now, if you do find that you're getting into positions and it's stopping you out and you're getting in again, getting in again, getting in again, because you have this tendency to think that you're correct and you need to make the money back, take a break. Once you have a loss, get away from the computer for a little while, clear your head, and then come back with fresh eyes. This is so important to a trader. It doesn't matter if you're a beginner, it doesn't matter if you are an expert. We all have this innate, I would say, weakness to believe that we are always correct. And it can sneak up on you, even if you've been trading for a long time and you start to think, I know what I'm doing, I can just jump onto the markets, don't need to do too much analysis, I can just take positions. I've been profitable for 3 months, 4 months, 5 months, a year, whatever it is. As soon as that happens, the market will kick your ass. I see it happening over and over and over again. It used to happen to me over and over and over again. A little bit of progress, I've made it, crashing back down to earth again. So understand that you are wrong all the time. I am wrong all the time. It is normal and it is okay, as long as you don't allow it to influence the decisions you are making. Okay guys, that is everything for today. As always, I hope that was helpful. Hope you're all having a fantastic start to the month. I'm James Orr, and thank you.